Have you ever found yourself looking at two choices, maybe investments, that seem kind of similar at first glance, but, deep down they fit very different needs?
Yeah, happens all the time.
Exactly. And that's the deep dive we're taking today. Gold versus silver as bullion investments.
A classic comparison.
It is. Our mission here is really to pull out the key insights from our research, help you understand the nuanced differences, right? How they stack up against your goals, your budget, what you think the market's going to do.
Sounds good. Where should we start?
Okay, let's unpack this, starting with the most basic thing, value per ounce. It's pretty different.
Oh, hugely different. Gold is, well, significantly more valuable per ounce. That gives it this incredible capital density.
Capital density, right, meaning
Meaning even a small amount, something you can easily hold or transport, can represent a lot of wealth. So it's great if you need discretion or want a very concentrated position.
okay, so big value, small package. What about silver?
Silver's the opposite in that sense. It's far, far more affordable per ounce.
Which makes it more accessible.
Exactly. It kind of democratizes precious metals investing. Someone with a smaller budget can actually build up a physical stack, maybe dollar cost averaging, buying a bit regularly, or just hedging inflation in smaller chunks.
That's a powerful difference right there. Accessibility versus density. So what about how they behave, market-wise? Stability versus those big swings potential.
Right. Volatility, that's where they really diverge too.
Yeah, this is where it gets really interesting, I think.
Gold generally tends to be much more stable. It's often seen as that classic safe haven asset.
When things get rocky.
Precisely. When the economy feels uncertain, people often flock to gold. It's got that long history as a store of value, and it often doesn't move in line with stocks or bonds.
Okay, the steady hand. Silver.
Silver's, well, it's a different beast altogether, much more volatile.
Like that.
Its price swings get amplified because it plays a dual role. Yes, it's a monetary metal like gold, but it's also a really crucial industrial commodity. So it reacts to investor feelings and what's happening in global manufacturing.
So gold is a hedge against volatility, maybe, while silver could be the volatility,
Yeah.
offering maybe higher gains, but also bigger risks.
That's a pretty good way to put it, yeah. The industrial demand piece is key.
Okay, let's talk more about that. How much does that real world use silver's industrial side, or gold's lack of it, really shape their investment profiles?
It's fundamental, really. It underpins a lot of the differences we see.
Okay.
Gold, it actually has quite limited industrial use overall, most demand. It's jewelry, central bank buying, and investment. That's the lion's share.
Got it.
But silver, it's used heavily in all sorts of cutting-edge industries, too. Electronics, obviously, solar panels, RFID chips, even in medical applications.
Wow. Okay, so its demand is really tied to economic cycles then.
Significantly, yeah. And industrial innovation, too. If global manufacturing slows down, silver can definitely feel the impact.
Right. Makes sense. Okay, so we've got market dynamics. But what about the practical side, like physically holding this stuff? Storage must be different.
Oh, absolutely. Very different equation. Because silver has that lower value per ounce,
Right?
you need way more physical space to store the same dollar value compared to gold.
Give me an example.
Well, think about it like this. $1 million in gold might fit neatly in a small safe. $1 million in silver, you might need a small room or a very large safe.
That's a big difference. So gold is just easier to handle in high values.
Much easier. Compact, easier to store, easier to transport. And that can also affect things like your insurance costs, maybe storage fees if you're using a depository.
That's a practical point people might miss.
Okay.
So you've got it stored. What about selling it, turning it back into cash? Liquidity? How do they compare there?
Gold generally has really high global liquidity.
Meaning easy to sell.
Super easy. You can sell gold quickly pretty much anywhere in the world, and usually with a very tight spread.
The spread being the buy-sell price difference.
Exactly. The gap is usually small for gold. Silver is also liquid, don't get me wrong. You can sell it, but
Right.
because of its lower value and bulkier nature, you might need to sell larger amounts to realize significant cash. And sometimes, depending on the market or the form of silver, you might find the premiums, the cost over the raw metal spot price, are a bit higher, or the buyback spread is wider.
So maybe slightly less efficient to trade in and out of, especially in smaller amounts?
Potentially, yes. Gold just tends to be the most universally accepted and easily traded metal.
Okay, this is all incredibly useful. Brings us to the core question, really. What does all this mean for you, the listener, trying to decide?
Yeah, what's fascinating here is it really boils down to your specific priorities and outlook.
How so?
Well, you might choose gold if your main goal is long-term wealth preservation. If you value stability, want minimal storage headaches, and need that top-tier liquidity.
The conservative store of wealth play.
Kind of, yeah. Alternatively, you might lean towards silver if you're actually seeking higher growth potential, even with the extra volatility.
Right.
Or if you appreciate its affordability, makes it easier to start building a position. Or maybe you're specifically betting on future industrial demand, solar, EVs, electronics.
So silver's the more speculative, potentially higher growth option tied to industry.
In a nutshell, yes. It's almost like gold is the wise, dependable anchor in your portfolio, maybe, and silver is the more energetic, sometimes unpredictable growth element.
That's a great analogy.
Yeah.
And I suppose some people choose both.
Oh, absolutely. Many savvy investors hold both. They try to balance the unique strengths of each metal within their overall strategy, get a bit of that stability and a bit of that growth potential.
That makes a lot of sense. So to recap quickly, gold offers value density, stability, easy storage, top liquidity. Silver offers accessibility, higher potential volatility and growth, but it's tied heavily to industrial demand and needs more space.
That sums it up pretty well. Distinct characteristics for distinct goals.
They really bring different things to the table, even though they're both precious metals.
Which, this raises an interesting question for the future.
Go on.
How might these individual properties, especially silver's industrial ties, influence not just your investment strategy today, but also how future tech developments might shift demand? Think about new battery tech or changes in solar manufacturing.
That's a fascinating thought. It really highlights that your choice isn't static. It's clear gold and silver offer very different things. It's not just about today's price, is it?
Not at all. It's about which metal aligns best with your long-term vision, your risk tolerance, and, yeah, how you see the world's economy and technology evolving down the road.